you so much for the introduction, Sharmila. It's a privilege being here at the first global investor forum, global conference of PMS Bazaar DAIS. I think everything has been so minutely thought through, right from the name to the venue to the speakers. I'm really looking forward today to listening to all my esteemed colleagues out here in the industry. This particular topic is something, when it came to me, I realized it invoked a lot of reactions from people. On one hand, you have institutional players saying, not again. We've heard this enough. India coming on the world stage, becoming a superpower. And on the other hand, I hear retail investors saying, really, if this is what it is, then what is the definition of long-term investing? Because it keeps changing every year. So I thought that instead of getting into an emotional pitch, let me just talk about data, logic, and probably go back in history to see whether there are any markers history has left for us. What actually turns a country into an economic superpower? Any country which crosses $2,000 per capita GDP will do well. I think that's a historical fact. But does every country become a superpower? Not really. So what are the markers? My attempt is to basically showcase to you a few pointers which we've gleaned. My belief is that India's thought leadership is the one which is going to lead to economic leadership. Country after country, whenever they become a superpower, it has not just been the tailwinds once you cross $2,000 per capita GDP. It's actually the thought leadership. And I've tried to analyze two countries in context. And also the fact that this is India's time, primarily because of a particular version of thought leadership we are now exporting to the world. This, ladies and gentlemen, is what we are exporting to the world. We are now creating cost-efficient and innovative solutions through leveraging talent, data, and tech. What do I mean by that? You look at financial inclusion through the JAM Trinity. We already have 46.25 crore Jan-Dhan accounts providing access to funds worth 1.7 lakh crores. Can you even imagine the amount of leakage that has been stopped through the system and which has gone into more productive purposes? You're talking about low-cost payment solutions. Just the other day, we were talking about country after country now looking at UPI and other low payment solutions from India, particularly from an NRI point of view. Also, if you look at it, we've been the world leader in tackling COVID. A lot has been talked about how we've used technology to leverage and we have vaccination certificates, etc. coming in. But did you know that India was the third largest in terms of vaccine production with a 16% market share? Even the US was behind us. So what is the India advantage? What is that, we are talking about? This is something which we keep reading about, and I'm going to go through some of these points to highlight the structural story which is now developing in India. You're talking about pro-growth policies. You're talking about ease of doing business. We are seeing this all across the board. The rankings have started climbing. Rapid privatization, and asset sales. If I have to just summarize, basically, India is now being talked about and being treated as an organization, as a corporate, not just as a country. Here you have at the leadership somebody who thinks like a CEO, who's trying to make sure that the growth of the country is more inclusive and democracy is preserved the way it is. All of this which you're talking about in terms of reducing of cost, in terms of credit and intermediation and streamlining public finances is part and parcel of that overall vision. Most of us in India are very, well versed with headlines like these. But for the NRI audience, I thought this was something which we must highlight. And I've taken a few of them. If you talk about, for example, infrastructure or exports, we used to import railway engines, trains. We are now exporting, or on the verge of exporting to developed countries. We are now replacing China as the world's premier manufacturing hub in terms of mobile phones. If you're talking about it's not just manufacturing and manufacturing, it's also thought leadership in terms of saving costs, energy. We're talking about India being a global behemoth in terms of green energy. We saved over 4 billion in fuel cost through Jan to June 22 alone. And of course, India, not surprisingly, is turning out to be one of the largest startup ecosystems in the world. I believe every 29 days, there are startups being generated and becoming unicorns as of this moment. We have not really forgotten our basics. If you go back and see food production, we are now attempting to be the food basket of the world. Also, it's not just that, we are talking about infrastructure. We keep seeing infrastructure in terms of roads, bridges being built. We also know for a fact that infrastructure is being built across the borders, which is very, very important for national sovereignty. This was something which, I was a little surprised at when I saw the returns. A lot of people talk about currency eating away into India returns. And, maybe one should look at investing in developed markets. This is data. This is something which is out there. This is as of December 2022. And if you talk about, a 1 year, 3 year, 5 year, 10 year, 20 year perspective, India is in the top 3 in terms of returns. US dollar adjusted risk, USD adjusted index returns. This is across all countries. You can talk about S&P, FTSE, Tokyo, China, Hong Kong, Kospi, Taiwan, South Africa, Jakarta. We are right up there. This was a little bit of a surprise to me because we tend to believe that, whatever returns come in, currency actually eats away into that. This is food for thought. If you're talking about India versus the globe, India is actually outpacing the world continuously in terms of growth. Barring a short period in 2021, I think India is outpacing the rest of the world in terms of growth rates. And it's not just that. Let's look at certain specific parameters. We all know about the economy size. We're probably displacing UK. Auto market, we are number 3. We've displaced Japan. Mobile phone production, we've displaced Vietnam, Korea, USA. Steel, we are number 2 in the world. Not just that. What is very heartening is climate change performance. We've shot up through the ranks from 31 to 8. And I think that speaks volumes when you're talking about the G20 leadership as well. And a whole lot of other parameters. So India's ascent across multiple growth metrics has only just begun, is the argument I'm making here. Let's look at the rising importance of India amongst emerging markets. A lot of us invest, at least at a global level, we invest in India through emerging markets. And usually it is felt that the weightage of India in the emerging market segment is too low. There's a study which has been done by a global institution which talks about the fact that to optimize returns in the emerging market index, one should look at least a 37% allocation to India. That being the case, eventually, hopefully, we are talking about India climbing through the ranks in terms of the MSCI Emerging Markets Index. From 8.2, we are currently 14.8 in a short span of just 2 years. So what is actually happening at the ground level? A trail of transformation. If one tends to follow the markers, history will repeat itself, only the protagonists will change. And this is where I'd just like to take you back to 2 countries we've tried to analyze. These are ballpark analysis. You can get into a lot of depth, but I've picked up select parameters to just buttress my thought process. Let's talk about the American dream. After World War II, you had, America exporting to the world a vision of the American dream. Bountiful fields, happy households, fridges stocked with a lot of, food to eat. This was a world post the World War II where there was famine, there was panic across the board. People were just coming out of a very, very bad phase. The American dream actually got exported big time through Hollywood. Hollywood actually took it to the globe. What started happening is you found that it started attracting a lot of immigrants into America. The melting pot that is America now is largely because of the immigrants which came in there, and they got all attracted because of the American dream. When you're exporting an American dream, when you're exporting consumerism, effectively capitalism led to materialism to consumerism. Company after company started growing in size. You had giant behemoths coming in to cater to the demand, not just in America, but the demand which is now starting to come in globally. In fact, there is a small anecdote which I read in one of the books, very interesting, that one of the American presidents, when he went to Russia, I don't know what phase this was, 3 days before he landed in Russia, there were malls created in Russia, just for viewing purposes, in an exhibition sort of a format. So the average Russian could go and see what a mall looked like. Remember, the average Russian was struggling to eat. He was not even able to buy food. This is the amount of dominance America started creating through the American dream. And of course, when you create that, people buy goods, you grow. So much so that in 1970, dollar became the reserve currency for the world. That enabled America to grow and actually fund its deficits and excesses. What I'm trying to say here is in 1950, USA crossed the $2,000 per capita GDP, and it was backed by thought leadership in terms of exporting the American dream. Let's talk about China. This is a country in 2006 which has seen the American dream on one hand and which has seen Japan's manufacturing prowess on the other. What does it do? It says it created this vision of capitalism-oriented communism. We'll roll out the red carpet for you. We'll do whatever it takes. Don't worry. We will take care of everything else behind the scenes. Okay? China actually became the global manufacturing hub of the world, so much so that they exported disinflation to the rest of the world. They kept prices so low that people consume more and more, and actually they exported disinflation. Interestingly, China also made sure that they had local partners, partnering all these global giants who came there. And eventually they started making knockoffs with these global partners, and today China is a world leader in premium play products, and I'll come to that later. Now what happens when you have a $2,000 per capita GDP backed by a thought process like this? Look at USA's transformation, okay? You're talking about, this is a very long-term chart, so I'm just going to be pointing towards 1950, when you had this $2,000 per capita GDP. Right up to 1970, I think it more than doubled, but once the dollar became the reserve currency, it just shot through the roof. The USA crossed it, in 2 decades, the world's have become, in 1970, it became the world's reserve currency. Also, the transition from an agricultural-oriented economy to a services-oriented economy led to a very big delta in the growth of the nation. This is very interesting, in terms of how the US grew in terms of the financial sector. There's a crucial role the financial sector has played in the US economy. And I'm going to circle back to all of these points to show you why India is on the verge of spectacular growth. You're talking about the profits of financial firms comprising a greater share of all corporate profits and of the total GDP of the US. Assets of commercial banks actually grew by over 2 times on such a huge base over the last decade. From 1950 to 2010, share of finance sector as a percentage grew from 3% to 10%, and that on a very, very large base. Let's talk about China. The same story, or a similar story. You're talking about 2006, they crossed $2,000 per capita income, backed by this vision of capital-oriented communism. The per capita GDP shot up by 6.5 times in 15 years. 15 years. It's happened right in front of our eyes. Okay? They focused on building a manufacturing base, and China actually fulfilled its vision of becoming the final processing and assembly platform for a large quality of imports going into Western countries. Let's look at China's consumption growth. This is a very busy slide, so I'm just going to stick to the highlights here. Interestingly, in 2000, 1.2 billion people could not even spend $11 in terms of purchasing power parity in China. Okay, 1.2 billion now are just moving across the income curve and are leading to one of the biggest consumerism booms which is happening in the globe. What you're seeing right now in China is just the tip of the iceberg. It will only increase. So, if that is the case, if US had a disproportionate sort of swing towards financial services, what has actually happened in China? China, around 1996, if you look at the top 10 banks in the world, there was only one from China. Around 2006, and this may sound very familiar to you, China undertook cleaning up of its banks in a big way. Today, when you're talking about the world's ranking system in 2019, 4 out of the top 10 banks belong to China. This is the amount of muscle China has wrangled in terms of its entire ecosystem for financial services. Now, circling back to India, what is going to be driving what we call India's golden era? Some people call it golden era. In Hindi, we call it Sone ki Chidiya. Is it really our time right now? And what are the factors which are driving towards it? Okay. Let's look at India on the pathway to exponential growth. We are on track to becoming the world's 3rd largest economy by 2027, the largest stock market by 2030, thanks to the investments we have been making in technology and energy. And you can just look at the 3 mega trends which are leading to this. It's global offshoring, digitization, and more importantly, energy transition. We believe that there are 4 structural wealth multipliers which will come in. I just showcased a lot of data to you. We believe the same or similar things are going to start happening in India. First of all, financial inclusiveness. I think we are still scratching the surface in terms of organized lending, but because of low-cost technological solutions that we're looking at, I think this will start exploding. And I've got a few slides to just showcase that to you. Consumption, if what you saw in China, there could be a multiple of that happening in India. Consumption can just really take off. What you're seeing here is just, again, the tip of the iceberg. Interestingly, we are also in an era where company after company is undertaking a self-disruption, if you will, in terms of adopting technology. These are physical and digital blue chips, and more companies are starting to build a moat because of phygitization. Exports, I think we have enough manpower. We've always been exporting software to the world. It is now turning out that we can export pharma, we can export chemicals, we can turn out to be one of the world's largest outsourcing bases and export to the world. Let's talk about financial services. We know some of these data points. We're talking about the growth of mutual funds. I'm not going to take you through all of these numbers, but I'm saying that financialization of savings is happening at an unprecedented rate. If you just look at the pie chart below, in 2017, financial assets as a percentage of GDP was just 41%. In 10 years, it will become 74%. And what is going to drive it? You're going to talk about mutual funds, AIFs, retirement funds, life insurance, PMS. The whole investment industry is going to really take off. This is just, and I think this is going to be a cliche by the time I end. It's just the beginning. India's vision to the world, like I was saying, rise of the digital economy. We are already talking about internet users climbing steadily. India's internet penetration is still far below China and the US, but it's catching up fast. Despite that, you're seeing so much of growth. I was just having a conversation with Pallav yesterday, and he was saying that, while he was buying a SIM card here, somebody was saying that you get 5 GB of data. And Pallav opened his mobile and said, listen, I come from India, we've got 500 GB of data right now. Okay, so that is something which, we tend to underestimate in terms of how it is helping us grow. We are already number 2 in terms of app downloads. 30 billion apps have been downloaded on our mobile phones. With the third largest startup ecosystem in the world with 77,000 startups. Can you imagine the number of jobs that these startups will create? And of course, 2 lakh jobs reported in startups, more than 2.5 times in 3 years. I think one of the points which we tend to also miss is this is not just an urban phenomena. Rural India actually presents the largest growth. We're talking about increasing electrification, mobile penetration. The rural economy is something which is yet to really take off in meaningful terms. In terms of exports, I think this is something we all are aware, but just to step back and look at a bird's eye view, by 2028, it is expected that we will reach $1 trillion of manufacturing exports. And the manufacturing share in India's GDP will increase from 15.6 to 21% in the next few years. In the next 10 years, India is expected to double its share in world exports. So before I go on to talking about leveraging the India growth story through alternatives, I'm just again talking about the case that we have just crossed $2,000 GDP. We're exporting this vision to the world, and we believe that India is expected to take off across a variety of parameters, especially across the 4 parameters I just showed you, and history is telling you that again and again and again. Now, if you have to capture that, one of the most prudent ways could be investing in alternatives. To just give you an idea, I don't think too many people would know about how fast this industry is growing in the country. Interestingly, 30 years ago, on a stage like this, when I was talking about mutual funds are fairly unknown. Mutual funds were known as alternatives. Today, mutual funds have become mainstream in a span of 30 years. So what is alternatives today is increasingly becoming mainstream. There was a survey done as to why people like to invest in alternative assets. Why does the Ultra HNI look at alternatives to invest in? There are 5 key things. Access to innovation. I think AIFs have that platform whereby they can give you different asset classes, different structures. There is access to innovation. Asset allocation, and I will show you a little bit on asset allocation, how alternatives tend to bring down volatility and actually improve returns over a period of time. Non-standard treatment, this is a limited pool of people. Not more than 1,000 people can come into an AIF and with a common objective, with common risk profile. curated thematic products. You can actually curate that product, a thematic product for that particular pool of clients, and access to the best minds. Some of the best minds in the business are here today, and they're going to be speaking to you. So if I have to just talk about, the growing breadth and depth of alternatives in India, we simply tend to think of India as a country which has debt, equity, and a few other assets. But you'll be amazed to know that there are so many other options at this point of time, right? From private equity, venture capital, alternate debt, hedge funds, real estate, special situation funds, the works. So much so that, and this is a SEBI number, that the size of the alternate assets, AUM, all CATs put together, CAT 1, CAT 2, CAT 3, is 84 billion at this point of time. This is a number which just took me off. I was talking to you about asset allocation. This is data which is, I think, Morgan Stanley data. They've talked about, this is probably an overly simplistic thing, but it wants to just highlight a point in terms of how alternatives can bring down volatility. If you have 3 portfolios, 100% bonds, 100% stocks, and 50% bonds in stocks, and if you add alternatives to them, 20% alternatives to them, the volatility in a 100% bond portfolio can come down by 26%, and the returns can actually improve by 14.5%. I mean, it's from 5.9 to 6.9%, but it has improved from by 14.5%. You're talking about a hybrid portfolio as well as a stock portfolio. I think this merits a case in your overall asset allocation. Let's look at the global alternatives industry, how fast it is growing. The global alternatives industry is already growing at a CAGR of 9.8%, and it's expected to reach 14 trillion this year, driven primarily by investor demand. See, the growth of wealth and the wealthy across the globe is leading to rise in alternatives. In fact, the growth in alternatives will be driven primarily by private equity and private debt. Private equity is expected to double by 2025, and private debt is expected to grow at a double-digit CAGR. If you talk about India, the growth of alternatives in India, although at a low base, has been spectacular. You're talking about a 7-year CAGR of 28% in terms of AIFs launched, and in terms of AIF commitments, you can actually see the number. Last year it was 6.4 lakh crores, and it's expected to be around 7 lakh crores in the next couple of years. This is the growth of alternatives in the country. Indian alternatives are expected to grow by 3 times over the next 5 years. Last but not the least, if you're talking about alternatives, we could offer you one of the ways to invest. Sundaram Alternatives, very quickly, is an institutional brand delivering a boutique experience. Very often I've heard clients saying, we love certain fund managers, we love certain institutions, can we have the best of both? Well, that is what Sundaram can do for you. We run with the hares and hunt with the hounds. A very, very energetic, startup-oriented environment in terms of the best minds, as well as an institutional framework which has been created by Sundaram Finance and Sundaram Mutual Fund over the years. What we have in terms of equity market capabilities are fund managers and research guys with over 2 decades of experience. We are pioneers in mid-cap and small-cap research. In fact, we have a formidable research base in terms of mid and small caps. 300 mid and micro-cap companies under coverage. We have a 3Q selection approach. I'll be happy to take you through one-on-one. In terms of debt market capabilities, this is something which is really catching fancy at this point of time. We have a very good core execution team. More importantly, we are leveraging on the Sundaram Home Finance and Sundaram Finance experience in terms of managing these. We've got extensive credit experience and very, very good execution skills. A dedicated team with a combined experience of over 45 years. What does this actually mean in terms of numbers? So we've grown substantially over a period of time. This is a very good, solid base. We've got very, very long-term investors. Some of our product track records in equity have a 12, 13-year track record. In terms of debt, the first real estate fund which we had launched, we've already returned the money back to the investors with a 15.6% CAGR. So I think it is something which is doing reasonably well. This is only AIF. In terms of portfolio management, I talked to you about the 4 themes. That is the core of our investment management expertise. Sundaram India Secular Opportunities portfolio is something which looks at long-term structural stories. It's got a 12-year track record, a concentrated portfolio of 15 stocks, And what will be of interest to you is that over the last 12 plus years, post expenses, this fund has given an alpha of 6.4% over the benchmark. Sundaram Emerging Leadership Fund is a mid-cap fund, has given an alpha of 5.3%, and Voyager has given an alpha of 6.4%. Not surprisingly, Pallav and his team have recently given us 4 awards, 1 award for each of our schemes in terms of performance. If I can just take you through the AF platform which we have Atlas, which is focused on opportunistic ideas, large and mid-cap portfolio, Acorn, which is on small and mid-cap stocks, and India Premier Fund, which is primarily consumption. Just to quickly round off in terms of private credit funds, 4 private credit funds, one of which we've just closed and returned back the money, like I told you. The first 3 have been on the real estate side, and the 4th one, which is currently on, is on the performing credit, the Emerging Corporate Credit Opportunities Fund. We've just done a first close of 200 crores, and even as we speak, we are nudging 300 crores currently. This again won an award recently for the best fund. I'll just like to round off by talking about this statement that history is a bad motorist. They all say that history is a bad motorist. It rarely ever signals when it takes a turn. But now when you go back in history and you see the markers industry has left for us to see whether the India growth story is a structural story or not, I think we have enough flags out there which say that yes, we are onto something which is very structural. Which brings me to the next point, that if indeed this is structural, indeed if you're talking about the next 15, 20 years, which are going to be, probably the golden era for India, then why do we want to stop ourselves by thinking about 3-year, 5-year returns performance? I think what we should look at is a good, solid, steady portfolio, which will help us capitalize this entire structural story and stop forgetting about what is happening in the short and medium term. That is the only way I think people will make money. And again, we've got a marker in terms of what happened in 1991. We are all Destiny's children, most of us who are here. In 1991, because of Manmohan Singh and the liberalization policies he brought up, all of us benefited. I would like to believe that today, at this point of time, that this is, like I said, a rarely ever moment which has come on our doorstep. We're very blessed as a country and at a generational level that we're seeing this happen twice.
Because of the American
so this is that rarely ever moment,
when
and
you're
history is
exporting an
indeed
American
turning
dream,
a
when you're
page.
exporting consumerism,
India will definitely become an
capitalism
economic
led to
superpower.
materialism.
Thank you very much.
Company after company.